Welcome. In this video, we are going to go over the Tradingwolf overlay script. To learn more about how you can use these indicators, you can find out more information in our Discord group and documentation on our website. For this video, we will break down each part and explain its features. Down below, you'll be able to use the chapters if you want to skip to a specific part. But first, we're going to discuss the trend candles. Now, removing everything else off of my chart, so I'm just left with the trend candles here. First thing I'd recommend doing is just sorting out the appearance. So one way you can do that is by going up into the settings up here in the top right, and then on the symbol you want to click off this borders. You can see instantly how much of a difference that makes to the appearance of the candles, and even when you're not using this indicator, I actually prefer it. It makes all of the candles a bit more obvious. And in the settings you can just change the colors of them as well if you want to do that. But yeah, it's a pretty simple concept where green is obviously uptrending. Orange is in indecision point, so either it's going to break either way at some point, and red is downtrending. So we tend to use these for trend confirmations. We wouldn't trade off of them alone, but I often have alerts for them on the daily time frame, so I know when market's changing. You can see obviously here we had a nice up move, indecision point, and then we had another break to the upside, indecision. It thought we were breaking up, but then never indecision to break down. But yeah, it's a pretty simple concept. So if you wanted to set an alert with them, simply go into the settings, toggle on this alert, and we recommend using the once per bar close. I'm going to just then click on the three dots next to the indicator name, add alert, and then I'm going to go trend dots. You may want to include the asset you're looking at, so I'm going to go BTC on the daily time frame, and then that's going to give me an alert every time it changes from bullish, consolidation, downtrending. All with that one alert. Next, we have the bands. Now, there's three different types of bands. So if you click on this drop down here, you'll see standard, which is the traditional Bollinger bands, triple, which is one of our own versions, and then reversal bands, which are the ATR based ones. I'm just going to start with the standard. I might just explain the settings as well whilst I'm here. So you have the option to change what they're calculated on, the sensitivity of them as well. So if you want them to be quicker, you drop this down to 1. You can see they're much smaller. You're going to get more squeezes. If you want them to be slower, you'd go on the opposite end, you'd go up to 5. We quite like them just on 3 though, but feel free to play around. Now, to explain the Bollinger Band squeeze, this option changes the sensitivity of it. So 1 is a high sensitivity, so we're going to be shown the most squeezes. If you want it to be a more obvious color, you can change it here. You can make it more bold if that's something you want. But I'm just going to leave it down on 40-ish for now. But the concept is when the bands squeeze, it sort of suggests that we're in a tighter consolidating period and we're looking for a breakout either way. So for this example, you want it to squeeze for at least a couple of candles, so this one would be considered valid, and the direction is confirmed when a candle closes outside of the bands. So you would have been confirmed on this candle, but this isn't necessarily where you look to enter. You look for a retest on the last candle of the opposite color. So for example here, you look for an entry on this red candle. So if I just get a box, you see price comes back down and retests this level, moves up, but it doesn't actually break away from this point. But then we do end up having another squeeze here, and then we have a huge impulse to the upside. Once again, same concept though, you wouldn't enter up here, you'd wait for a retest of this candle down here. So just highlighting the body, you can also include the wicks as well, depending on what asset you're on. For Bitcoin, it tends to work well with just looking at the body of the candle. But yeah, so we have a huge impulse up to the upside, comes back down, and you would have got a nice entry down here. Same concept here, even though you would have already been in the trade potentially twice. This one would have been, the first one was a bit harder because we had a stop hunt here, so if you had a stop loss on this one, you probably would have likely got stopped out here, but you would have been able to get back into this one here. Then we finally get another one, squeeze here again, so you would have had looking for an entry down here. Hopefully you still would have been in the trade from the previous one. Otherwise I think this one just has a large impulse away and we don't get a retest of that level. No. So you would have caught this entry here, and nice move to the upside, and now we've got another example here. Price squeezes, we have a break to the downside. So this is a break looking for a green candle. See this one, it actually didn't quite reach the body of the candle. It was a very small candle, so you might want to look at the wicks for that one. Then we have the move to the downside. Just show you one more example. So this one's only one candle, so it wouldn't count. Here we have several squeezes, so looking for a break either side. We end up getting a close here on the outside. So once again, looking for a retest into the last green candle, which is here. Would have got that comfortably. Takes a while to play out, does actually end up coming back up, potentially another stop pump. But I'm actually currently looking at the data, the most recent data in Bitcoin, where the market's been very volatile because of the FTX news. So market's not been acting 100% traditional, but just trying to get the idea across to you on how we like to trade these. Okay, so just finding one more example here. So we have price squeeze here, red candle close on the outside, so we'd highlight this body here. This would be entry point, price comes back up, we would enter into here into a short position, and then price nicely moves to the downside. You would have been looking for another entry here on this candle, but price never came back up. So it would have just been in that one entry there. But yeah, that's the idea of the Bollinger Band squeezes. We don't really recommend trading with the Bollinger Bands in any other way. Some people just like using the middle moving average as a sort of trend detection, or take profit level if you're in a short position. You can use it to get out of a position once price crosses back above it, sort of as a trailing stop. But yeah, we don't recommend really trading with the Bollinger Bands in a separate way to that. Next, we have the triple bands. Now, these have a similar sort of calculation style to the traditional Bollinger Bands. Apart from, I think they add a lot more precision. You can tell what's happening over a larger scale. So there's a couple different ways we like to trade with these. You can refer to them in our documentation or in our Discord group. You'll see us mentioning them. But one way I'm just going to go over today with how I like to use them is we refer to this middle yellow line as a pivot line. This is sort of your trend detection, okay, in which way you're looking for a trade. If you're below the line, you're looking for a short position. If you're above it, you're looking for a long position. Pretty simple idea, but well, it actually does get a little bit complicated. For a trade entry, if you're below the line or above the line, you want 2 wicks to touch the yellow line to confirm that you want to get in a trade. So for example, we only have 1 wick touch here. We're below the line, so we're looking for a short. Here we have 2 wicks touch in a row, so we would have entered in a short position just here. If you close back above the line, you would exit the trade. So this one would have been a 1.96% loss, or 1.9ish% loss. To get in a trade on the other side, you want 2 candle closes. So here we have 1, 2, so you would have entered up here. Now you can do take profits however you want. Personally, this is how I do it. So I use this top level and this top level here as 2 different take profits. So I take off 20% off my position if we hit this one, another 20% if we hit this one. Then I'll take off 20% if we drop below this red line. Even just a wick, I'll close 20%. So in this trade here, I would have closed 20% up here and 20% here, and then I would have left the rest running. That ended up coming back out, and I only have 1 wick here, so I didn't enter another position. We closed below, so I've exited my long. Entered a new short on the second close here. Once again, doesn't actually quite reach that, so it would have ended up coming up, closing 20% for 2.5%, and I would have got stopped out again. That's a larger loss, this one, about 5%. That's okay. It's okay, because in this next one here, we have a close, second close, so we're entering here. Take profit, hit once at 6.8%. Take profit again at 13.5%. Oh, and sorry, we would have actually closed 20% because we went up and then ended up coming back down below the red line. So the first point that happened was just here actually. So we'd have closed 20% there, 20% here, and 20% up here. Then we still have 40% of our bag running. And that 40% ended up closing out on this candle here. So where was the entry? Second candle close up here. So it would have closed for 43%. Okay, that's fine. Now just going to quickly show you, I'm not like just cherry picking trade examples here, I'm just simply running through the data. So if you're not interested in this at all, feel free to skip ahead. Otherwise I'm just going to go through a couple other little examples. So entered a short position here, 20% taken off here when the wick comes back up, and still riding at 20% close at 12.5%, still riding at. Could have potentially entered in another short position here because we have 2 wicks. I'm already in one, but you can double down on your position. You can do whatever you want, not financial advice. Ends up, we do close below the line here, and so then a crossover here would have closed at 20% again of that position, and then close the rest of it out on here. We have 2 closes above here, so this would have been an entry here. Move to the upside, doesn't actually quite reach that take profit. We'd have closed 20% on this wick crossing down here, 3.8%. To the short side, closed down here, you would have entered a short here, didn't go well, ended up closing just here for, that was a very small loss, 0.45%. Down, 2 closes, you would have entered in a short position. We wouldn't have entered a long position here, by the way, because there's only 1 close above. Then we have never closed just below. So 2 closes below, short position, exited, 2.75% loss in the end. No entering positions here, but this is a second close down here into a short position, much further away from the yellow line, but still would have been worth the trade. So entering here, you'd have hit first take profit here at 4%. Doesn't quite touch there, so you're still in this same trade. Closed out another 20% here at 9.5%. Still riding the rest of it. There we go, closed another 20% at 17%, and then you would have closed the rest of the trade on this candle here. So you'll see it's not like a really high percentage accuracy strategy, but when it catches wins, they tend to be much larger wins. I know I did actually skip, I started from this point, but you would have had a short entry which rode all the way from up here, and I'm not going to show you the entries or the exits, but from actually just simply on the yellow line crossing, that's 64% move to the downside. So this is one of the strategies I like to use. Works much better on higher time frames. You can also use it on lower time frames, but you want to take into account the actual market structure. If you're looking at lower time frames, make sure you're trying to trade with the trend, because you're going to have a much higher success rate than that. Okay, so next we have the reversal bands. Reversal bands can be for stop losses or take profits, depending which way you like to trade. We don't actually really recommend trading off of them, but they're ATR calculated. So if you're looking for where to put your stop loss, say you find an entry for a short position somewhere around here, you would put your stop loss at the top. You can also use them as like trailing stop. So if you did enter anywhere around here, you'd have a trailing stop loss which comes down, and you'd always just take the lowest point it reaches. So once we come down to here, this is where your stop loss would move, because since it goes up, you don't move your stop loss up if you're in a short position. So you would have ended up getting stopped out around here. Just do an example for the long side. So say you found a long position somewhere around here, your stop loss is going to be here. You'd follow it up. Here you would leave it on this high point. As it decreases, stop loss would still be here. Now it starts increasing here, and then you would have got stopped out on this candle here. But that's a simple concept with the reversal ATR bands. It's trying to find where a price is going to reverse at some point and change the trend. So just to run through the alerts on the bands, we do plan on doing a couple of updates on these to add more features. At the moment, we've got the alerts for the squeeze on the Bollinger bands, and on the reversal bands, you can have an alert when price hits those. We don't currently have anything for the triple bands, but yeah, we will be adding them soon. But at the moment, we've got an alert for squeeze. So when this first candle closes that we're squeezing, that's when you'd get an alert. I do also plan on adding an option so you can get an alert on the first candle which breaks out after a squeeze. But at the moment, it's just a squeeze for now. And yeah, as I said on the reversal side, you can have an alert when it hits the inside or the outside band. If you're using this, I'd recommend using the once per bar so you get an alert instantly. So I'll just do an example on this one. So I'm going to put it onto reversal, and we're going to go for the inside on a frequency as once per bar. So okay, 3 dots, add alert, ATR bands hit, and that's it. That'll do both the top and the lower inside bands. Next, we're going to be looking at the TD Sequential 8 and 9 chart pattern. Now this is all part of a 13 candlestick pattern. I'm going to break it down in just a second, but basically these signify potential reversal points after strong trends. Now you want to line these up with other means of support and resistance because you don't want to end up catching a falling knife. But just to explain the candle pattern, I've labeled it out here. So just looking at this one from backwards, so we have the 8 and 9 signal here. So I've just numbered down 7, 6, 5, 4, 3, 2, 1. Then we have 4 candles before that. Now the rule is that for candle 1, the close must be below candle A for a long reversal. So we're looking at a bullish 8 and 9 here. So candle 1's close must be below A, which is correct. 2 must be below B. 3 must be below C, and so on. This repeats all the way up until 8 and 9. As you can see here, all of this meets in place, and we have an 8 and a 9, which signify a strong reversal. Going the other way, once again, just so you've got a 9-8 all the way down onto the 2-1 here. Now you can calculate this pretty much on every candle, but you would literally have to go through A, B, C, D and mark it out live, and then constantly update each candle as you're going through in live charts. So this indicator saves you all of that trouble and calculates it for you. So once again, we've got an 8 and 9 up here. So if we go all the way back, we've got A, B, C, D starting here. The close has to be higher than the A close, and you can see here it's a red candle, so the close is down here, which is true. If we're trying to start at the candle below, just to show you why the one didn't start before, so the close on this candle, so it would have previously calculated this being 1 and this being A, but the close is below A, so that didn't happen. Hence why we're now looking at this one here. So close above, once again all the way, so 7's above 3, 8 above 4, 9 above 5, and then we have the full pattern. Same again, same concept. I'm not going to go through it again, but that should hopefully explain the basic concept of it. I might just show you this example here. We only have an 8. 9 was never actually confirmed, because if we look at this is 9, 8, 7, 6, 5. The close of 9 is meant to be below 5, but it isn't in this circumstance, so therefore we don't get a 9 signal printed. People can still trade this, but it just means it's not as a strong reversal. There is actually a never 13 candle pattern which can be repeated after this first one for even stronger reversals, which we might add in the near future. But for now we've just added a traditional TD sequential. But that's basically it. We don't recommend trading off of this alone. You want to use support and resistance as confluence, as mentioned. But yeah, it's very popular, and if you don't know much about it, you can find out more in our documentation. In the settings, you have the option to, if you're only looking for buys or sells, you can choose which one. If you don't like the little label in the background, which makes the text a bit more prominent, you can simply turn the opacity to 0, and then you'll notice that this will disappear. For the alerts, you can choose to get an alert on 8 and 9, or just have an alert for 9. So this would trigger as soon as an 8 appears, and then you'd also get another alert on the next candle. Once again, you have the option to choose once per bar close, or both. I'm going to set an alert up on once per bar close for 8 and 9. So I'm going to go add alert. Once again, top boxes are already correct. TD select on ETH. Create, continue anyway. And that's your alerts created for both the long and the bear side. Next, we're looking at the top and bottom predictor. Now, we can't say too much about this without giving away how it's calculated, but just know that it's trying to predict the actual tops and bottoms. These signals appear in real time, they're not repainted or anything like that, and they work particularly well on higher time frames. We like to use this in confluence with our smart money concept script, because it lines up lots of support and resistance areas where we get potential reversals. But yeah, we thought we'd add the signals on this script, so then you can have both running at the same time, or you can also line this up with some of our other trend dots and trend line, which we'll do in just a moment. So yeah, I can't really unfortunately say too much, but just know that these signals appear as soon as the candle closes. For example, this one would have appeared on this candle close here, same for here. They don't necessarily always catch the exact tops and bottoms. As you can see, those two weren't particularly great, but these tops were good, these bottoms were pretty good too. So yeah, I'll just show you the settings now. We might end up adding some other settings, such as increase the sensitivity of these, so you can play about with them if you want to get more signals or less signals. But simply you can turn them off and on here, change the colors of the tops and bottoms, and to create alert, I'm going to set them to once per bar close. You can use once per bar. Add alert, top and bottoms. Continue anyway, and it's as simple as that. I'm just going to move straight on to the next one, which are the trend dots. Now, once again, these you want to use in confluence with our other indicators, but these are to give you an idea of which direction the trend is going. We have seen some users create their own strategies just based off these trend dots alone, but we're not going to share those because we haven't back tested them, so we're not sure how profitable they are. But pretty simple concept. You'll see a couple where there's neutral, where it's not got a dot on either side, where it's, or indecision we like to say, So here we get the first bullish trend dot, so this would be where you're looking for potential longs, and then here we flip to the bearish side to move down. But once again, there's not too much to say here without actually breaking down their calculations, which we don't want to do because we want to keep it to ourselves. You can change the colors of the tops and bottoms, and to create an alert, simply just toggle it on once per bar close. You can use once per bar, but you may get some repainting signals. And continue anyway. Simple. Okay, next we have our trend line. So this one has 3 different settings on it: low, medium, and high. And these all change the sensitivity of them. So low is going to be the slowest, whereas high is going to be keeping up with, or the highest sensitivity is going to be keeping up with the latest price action data. So you can see here that's much closer. Depending on what time frame and what sort of trading you like to do, you'll want to play about with this, but we quite like low. When you're on the sort of mid-range of time frames or scalping, you may want to use a medium, but for higher time frames, we quite like using the low time frame. As you can see here, just looking at low, if I just hop onto a higher time frame, so this you wouldn't necessarily use for signals, but you'd use as confirmation for a trend direction. As you can see here, you'd be looking for longs in all of this green area up here, and then looking for shorts in this period, longs, shorts. There was a fake out here, which quickly reversed and came back down. But yeah, this is a simple trend line. You can use this in correlation with our TD sequentials or reversal signals, trend dots. Reversal signals, you may find you don't actually get a whole load of signals, obviously, because I mean you're trying to catch the trend going the opposite direction. So here you're not going to take a short, because why would you? You're thinking that you're going parabolic. But this one would have been a nice long idea. The TD sequential, you are going to get a lot more signals because they just generate more signals than our reversal ones. So you can play about with those. Or obviously you can just change the sensitivity of this. It's not as accurate as for the higher time frame you go, you want it on a lower sensitivity. It gives more accuracy. But yeah, for more trades, then you would want to change the sensitivity down a bit. You can find actual strategies we recommend though in our Discord group, and on our documentation we've published a few strategies including these with the trend lines, trend dots, TD sequential and reversal signals. But I'll just show you how to create an alert. The alert will trigger once we switch from green to red or red to green. So toggle this on, make sure your everyone's are turned off. Once per bar close we recommend for this one. Trend line change, continue anyway. And that's the alert created. Next we have the correlation tables. This displays the correlation coefficient for the different given pairs. In the middle column here we are given the correlation values. Below 0 means that we are negatively correlated. The strength will indicate strongly negative when we drop below 0.45, that's negative 0.45. And on the opposite end, being above 0 is positively correlated, and the strength will indicate strong positive when we go above 0.45. Now by default, the list of assets we are comparing is Bitcoin, VIX, the S&P 500 and the dollar index. Obviously, if your chart is displaying any of these assets, then the correlation value will be 1, as we're comparing the exact same values, so there is perfect correlation. So as you can see here on Bitcoin, we've got a 1 because we're looking at the Bitcoin chart. There are a huge amount of use cases for correlation. You can find loads online, and we'll share some in our Discord group, but I mean, for a couple examples, if you're looking to enter a crypto market, you may want to check the correlation against Bitcoin and see which direction that is playing out. Or if you think the dollar is going to fall, you may want to check how negatively correlated a particular currency, stock, or crypto is to see whether it's worth entering. You can even do arbitrage using this, but that would actually end up probably taking its own video. So I'll just explain the settings here. So you obviously can toggle that off and on. You can change the background color, the text color if you want to make it more prominent. You can change the location, maybe you want it in the bottom right instead. And you can actually change the size of the table as well, so you can increase it, decrease it, do whatever you want there. Now we can also change the list of assets we're looking at. So say we want to be looking at the Bitcoin chart, you simply click this edit tool. And we don't want to compare Bitcoin against Bitcoin, we'll compare Ethereum instead. So simply change it to Ethereum, and you can see it's changed here. We're still sitting at 0.99 correlation, so obviously they're very strongly correlated on the higher time frame. If we go down onto lower time frame, you'll see these values change because we're looking back at, say, 500 candles and we're comparing the correlation between those. When you're on the daily time frame, the macro moves are going to be a lot more similar, whereas you might get some more variance on lower time frames. But yeah, you can find out more information in our documentation regarding the correlation table. But there are a huge amount of ways you can use correlation, and it's a very big topic. You can find lots of information online about it. But yeah, now we are going to move on to the volume profile. So the volume profile is measuring trading activity over a specific time period. This indicator plots a histogram on the chart which shows the dominant and insignificant levels. So just as an example, as we can see on our chart here, it's fairly obvious that this level where we have the point of control line, which is this long black line, is the heaviest traded area. And if we just look back over this time period, we can see price is interacting with it quite a lot. Whereas this area where the histogram is very small, price is only just broken down here, and therefore it's very insignificant compared to this sort of cluster we've got further down here. So the most common use for the volume profile is identifying basic support and resistance levels. It is important though to remember that the most common use for this indicator. The most common use for the volume profile is identifying support and resistance levels, but it is important to remember that this is a dynamic indicator, so every time a new candle closes, we are then taking that candle's calculations into consideration, so all of these levels will adjust slightly to match that. But yeah, so the most common way would be if, for example, if we traded back up into this area here, I'm sure there's going to be a lot of shorts building up around this 19,000 level, because simply this is where it was highly traded before. We've broken down from it, and now this will be turned into resistance. These low volume areas just mean that price is more likely just to fly through them. Traders aren't likely, as you can see, there's very little volume traded here, so traders aren't placing their buys and sells here. Price tends to travel through them quite quickly. So that's why we would expect potentially another retest up to here. But if we did retest up here, we'd expect a lot of consolidation or potential just rejection straight off of it to the downside. But it'd be very unlikely that price would just simply break through this area after we've had about 427 candles, just over 2 months sort of trading in this sort of period. Looking at the S&P 500 here, so I'm just on the hourly time frame, just trying to find a more bullish example. So here we're trading above the point of control. This isn't the most clean, so unlike the Bitcoin one where we have a heavily traded area and then lots of gaps, this one's much more traded all across the board. So you wouldn't feel as confident just placing an order here. You'd want to go onto lower time frames and line it up with more support and resistance levels. But this is still the point of control, so ever traders will take note of this as price comes down to test it. For scalping, you would simply just be on lower time frames, and you can see here we're just taking a smaller chunk of this range to calculate all this point of control on. So if you're looking to try enter a short position, you potentially wait for price to come up and retest this area here. However, once again, you would be wanting to watch this as price comes up, because as price does trade up into this area, the point of control is likely to actually slightly move down a bit as we're having new trading volume added to this cluster here. So they're likely to come together and potentially find a short position if price does end up pushing a move up to there. So there are lots of different strategies you can use with the volume profile, but you want to pair them with other indicators. So you can find more information about that in our documentation and our Discord group. But just to show you the settings, you can change the colors of the volume profile. Point of control line, you can change this color as well as the width if you want to make it more prominent. Offset, so if you don't want this to be on your chart, you can like shift it further away. So here I've just shifted it along 50 candles. If you don't want the volume point of control line there, if you think you can just see it, then that's fair enough out of your chart. And then finally we've got the sensitivity. So this ranges from 1 to 5. 1 will be the most reactive and working on the shortest range. So you can see here we're getting very different values. I'm going to put the point of control line back on, and you're getting a slightly different point of control line once again. But you can play about with this and see what you like. We quite like just looking over a larger range because those values tend to give more significance as they've got more data to back them. So that's a basic overview for everything in our overlay indicator. We hope you enjoyed, and I hope everything sort of makes sense a bit better now. If you do have any questions though, you can contact us in our Discord group or on our website. But yeah, that's all for now. Thank you very much for watching.
Bust this.